It's Monday. That means it's Setup Monday here at Brave New Coin. Let's take a look at some charts. Let's combat some FUD. We had a barrage of things that were a mixture of true and untrue appear over the past few days. Not that it's specifically the reason why we sold off here over the weekend, but when the market's looking for something to sell off on and you get semi-bogus news item after semi-bogus news item, eventually it's just too much, right? And the people who were leveraged to the hilt at the top got culled pretty quickly on that drop. What was a 11:30 EST PM move on a Saturday? Bit unusual, low liquidity, predatory type move for people who were too long at the top, essentially. You know, there's always a predator out there or a group of them looking for the path of least resistance, right? So sometimes it's down if people are, it's a long squeeze basically, if people are super leveraged. So really the big thing for me was the disappointment in Bitcoin's underperformance relative to everything. And it felt like I didn't have some piece of information that everyone else had. It's like there's a conversation happening and I don't know what people are saying. Basically is how I feel on the Bitcoin chart, because it looked by all accounts like it was ready for pretty decent price discovery. Although volume overall was essentially flat, it was appearing as though it was perking up on a multi-week basis. At least the buy volume was perking up. And then, we broke above this ascending triangle, and we broke down. If you measure this as a inverted head and shoulders even, it's still a valid target above where we actually hit. So we had some aggressive sellers, I guess, on this, who recognized that, again, the path of least resistance was down. We had some bogus tweet about cryptocurrencies and money laundering. We had some bogus stuff about Coinbase insiders selling. We had some decent mining FUD based on hash rate and the mempool that has basically cleared up at this point. So we had a mixture of things, certainly. Doge, obviously, sucking all the fun out of the room as well. That's another part of this whole equation. While BTC was languishing at the highs, Doge was pushing all-time highs, big time. So liquidity begets liquidity, as they like to say. So that's enough about my lamenting on the lack of BTC performance here. So if we look at this now, obviously you don't want to break lower lows. If you're bullish, if you're bearish, you want to see continuous lower lows. You want to see wicks get broken over and over and over again on higher and higher volume. You don't want to see any bull divs forming here if you're bearish. You want to see bigger volume on every low, right? Like that's, if you really think this is the top, that's what you want to see. You want to see either a slow continuous bleed, just a complete lack of bid, or like November 2018, where this stuff just gets pounded and pounded and pounded. Whales, for example, would be able to do that because they're the ones who control most of the coins, right? Looking at more of this, if we look at the Bollinger Bands, we had a Bollinger Band breakout on the daily, which was also optimistic. That reversed extremely quickly. A little bit of a concern. Again, seeing this breakout, but not on massive volume, and then no continuation, retrospectively. So for me here, how I trade this is I actually luckily got out of my personal leverage stuff at somewhat of a profit. But spot-wise, I don't think it's a major issue just yet, like the Enzyme stuff, the ETH BTC stuff on Enzyme that I trade for Techemy. I'm not super concerned about that in the near term, even in a chart that looks like this, because of other stuff that I'm about to show. But I'll definitely discuss what would cause me to rotate out of the allocation sizes I'm in for ETH and BTC. So if you're bearish, you want to see the B bands break down, right? It's the opposite if you're bullish up here. You want to see B bands break down. We already crossed below the 20. So that was the first line of support. The next line of support is going to be, can we break the B bands some more throughout the day or throughout the next couple days, over the next week? Because if you're bearish, you just want to see us ride the bands all the way down. And if you're bullish, you want to see us come back to that 20-day moving average. This is probably the most bearish, or the most concerning forecast, is basically a complete mean reversion to the 200-day EMA, which would be basically 40K by the time it gets there probably. So we haven't broken below the 50 since October. We haven't touched the 200 since September, so we're currently well overdue for a mean reversion. And there's a lot of daylight between where we are and where the 200 is, obviously. There's an R2 at 45. It's interesting, again, that we stopped at the R3 pivot on BTC. I'm looking at, this is the issue with, trading stuff like this. It's like, what do you take into account here? Do you assume that this is going to break up, or do you focus on the R3 yearly pivot? We even had room in the pitchfork here. Nevertheless, when I look at this retrospectively, it's like, yeah, okay, I can see that we broke down there based on a yearly pivot and lack of momentum, right? If we were to break the R3, then I'd say, okay, it's time for R4, but now it looks like we're ready for the R2, we're ready for the 200, we're ready for even the R1 potentially. Again, if you're bearish, you want to see all of these lows break. You want to see this previous all-time high break. If you're bullish, you want to see support there for sure. You definitely don't want to see a break of yesterday's low on the wick. You don't want to see a break of the March low. You don't want to see any of that break if you're bullish. This is we'll switch back to BTC for a sec. On trend, on low time frame trend metrics, there are 3 types of stop loss for the alligator fractal. The first is the MA is flipping bearish. If the MA is flip bearish, you're out. If price breaks below the bear fractal, you're out. And if price breaks below this median line, you're out. So it's getting extremely close to saying, all right, it's time to step out of this trade based on low time frame MAs. So if you're not trading low time frame MAs, moving averages, you're trading high time frame stuff or higher time frame stuff like Ichimoku Cloud. And it's been bullish on the TK cross since October 2020. And we've had a few Kijun bounces. This could very well be shaping up to another Kijun bounce. What worries me here is we dipped way below the Kijun. Certainly it was bought back up swiftly. If anything, this was a weekend low liquidity stop raid on alts, especially. Some alts got demolished. Ren went to 0 on Binance. I'll show that if you haven't seen it. But to me, it feels more like a low liquidity weekend stop raid than a top or even a cycle top, even a mean reversion, because the daily cloud looks okay to me trend wise. Like I said last week, until we're in the cloud, then you're done, right? Then the longs you're definitely out of your longs by that point. And if you are trading on the daily, then you're trading the fractals, right? You're trading the lower time frames. If you're focused on the near term, and I definitely would want to be out of any longs based on this fractal, because within the consolidation, there's an expectation that trend metrics are going to look noisy. But once it breaks out, you expect trend metrics to be clear again. So at this point, if they get noisy again on the low time frames, it's definitely problematic. So if you're bullish, you buy the Kijun like you have been since end of 2020. If you're bearish, you're waiting for a close into the cloud with a target of the other edge of the cloud. That's that edge-to-edge trade. Talked about last week, it had been a remote branch of the decision tree. Now it's getting to become a growing branch of the decision tree. It is formed a bud and is ready to flower very quickly here if we break into the cloud. But overall price structure doesn't look, on BTC, doesn't really look like anything to me at this point. It had its consolidation, had its breakout attempt, failed, and now it's back to sort of consolidate and wait, chop around. ETH was actually much more clear, and I kind of don't have an excuse for not closing more of my ETH positions at the top there. First, it was above, it was at the R5 yearly pivot. Okay, that's the first thing to notice. The second thing is it reached its measured move. Unlike BTC, it reached its ascending triangle measured move perfectly, right? Like this is exactly what you want to see if you're trading this on leverage. You want to see consolidation, obvious pattern, known pattern that people are looking for. And even if you don't believe in the ascending triangle here, you just measure a high, measure a low, and you get the same targets, right? Based on fibs and fib extensions. One thing that convinced me that this was an ascending triangle was the throwback here to the support or resistance confirmed support. So again, if you're bearish, you don't want to see, or you want to see these lows get broken. You want to see the previous horizontal break. You even want to see this diagonal break, right? Like that's the ultimate bearish move, is breaking the multi-month at this point diagonal. Now we break that and it's going to get ugly across the board. So right now you're still in profit, right? You're still above that 2000 horizontal, the 2000 psychological support, that sort of thing. Here's a diagonal again. You definitely don't want to break this diagonal if you are bullish, because at that point, if we break the 50, which is what this diagonal essentially is, then we're very likely going to the 200 period moving average, 200-day moving average, which is at 14, our 2 yearly pivot at 1200, and curiously enough, the pitchfork for ETH, which it's been out of since the beginning of the year. And what's interesting about this is in 2017, BTC had a similar pitchfork that it broke out of, retested the pitchfork itself, and then the 2017 insanity started. So remotely in my mind, not an expectation, but certainly a possibility. That's the type of situation I'm thinking about for ETH here, is a mean reversion to the 200, confirming this whole pitchfork nonsense as support, and then 10xing from there basically is certainly a possibility, not an expectation. Definitely a possibility. Even LTC hit its ascending triangle target. So all in all, BTC extremely disappointing in expectations for a move here, for all the reasons I already talked about, potentially based on the FUD and alts just sucking all the liquidity out of the room. On the daily for LTC, this is definitely a shooting star. So that's candle-wise inverted dragonfly, whatever you want to call that. Doesn't look good for alts in that regard. It's hard to get immediately bullish on ETH still as well. It's more of a consolidating weight. This may transform into some sort of head and shoulders, but I'm not excited about buying any of the lows here necessarily for alts. Here's ETH's faster MAs, and the alligator looks much better than BTC, right? BTC's alligator is ready to flip bearish. It's below the median line. It's ready to break the fractal. ETH, not so much the case here. It hasn't yet even wicked below the fractal. It hasn't wicked, or it hasn't closed below the median line, and the MAs look okay. So if you're bullish, you want to see all this hold, obviously. If you're bearish, you want to see all of these MAs break. You want to see fractals break. You want to see us break lows. Like I was saying, like this is another way to just look at those lows. You want to break 15. You want to break 13. You want to mean revert completely to the 200-day moving average, that sort of thing. If you're bullish, you want to see us ride this median line and maybe crisscross, chop around, but definitely don't want to break any of these lows. Now, if we do bounce from here, we will put in another fractal at this low, and at that point, that'll be the new trailing stop loss. Right now, the trailing by entry is the stop limit is at 2,500 for ETH. And the ETH cloud also looks fine, better than BTC, in that it hasn't even touched the Kijun yet. Although over the past few weeks, ETH has sort of hugged the Kijun more and even exceeded it a little bit with a cloud entry potentially, right? Like this is the most dangerous of all buying, long buying setups, because we get a candle close below the Kijun. We don't get a candle close in the cloud. It's like, it looks good. It looks like a good buy. It looks like a Kijun bounce, but it's hard to be super convinced. You'd much rather see this wick stuff, right? This wick bounce. So again, comparing this to BTC versus ETH, ETH looks better than BTC does on trend. ETH BTC obviously is doing quite well as well. I still don't think this is necessarily tradable. I don't think there's some sort of pattern here. I don't think there's anything here. Trend-wise, I think you just have to wait this out to end of year or mid-year until we see some sort of strength, like continuous, actual, measurable, other than this like sideways chop up. We did pass the R1 yearly pivot, which may at this point be support. And ideally, if you're bullish ETH BTC into the end of the year, you're kind of expecting this to run the yearly pivots. You're definitely expecting a run past the pitchfork median line from, let's say, 05 to 075, something like that. Like that's the type of move that is realistic if you're bullish into 2022. Now, for me, I'd much rather buy this red zone into June and then kind of set it and forget it. Easy mode. We're above the weekly cloud. Trend says it's a buy, right? That's for me. I'd rather buy down here. Whereas I can see some people getting excited about buying up in the blue zone of the pitchfork. But either way, it looks fine for ETH BTC on the bull side. Just definitely choppy. XRP weekly. I'm just going to look at a few more charts for some of the alts here. This is a nasty looking shooting star, inverted, dragonfly. This is Polo, so it's probably a little out of whack liquidity wise, but still, it doesn't look good. What you don't want to see if you're bullish now at this point is any weekly close this week below the previous week's wick. So, if we break a $1.10, if we break a buck, it's definitely over for for Ripple as far as this up move is concerned, because that's a big psychological support. I feel like the more retail is involved into some of these coins, the bigger importance and impact these psychological support resistances play. So a trader might be thinking, I'm going to buy anything below $1, whereas a retail individual is thinking, I'm going to sell anything below $1. That's kind of where I think the mindsets are at. So I think a lot of this is retail driven, honestly, at this point in the altcoin land, especially Doge. Doge, it feels like it's a mixture of blatant manipulation, retail FOMO, and it's kind of like the GME situation where people will assume it's like retail FOMO, but retail FOMO can't necessarily pull this up like it has been if bots aren't involved, if, looking at Elon Musk's tweets aren't involved, right? Like this doesn't move. Charts don't move like this unless there's some sort of bot activity. If anything, these past few days look more organic than some of these prior moves on the daily, right? But it's interesting how the Binance, how it went from the wicks got super wide, right? The daily moves got rather wide, and then they tightened up a lot prior to the move as well. Like it started to look like a real chart. When I see this, I'm thinking, what's going on here, right? This is just, the spreads are wide. It's poor liquidity. And then the spreads tighten up and things get interesting. So maybe that was a precursor to watch for, is when the chart starts to look real on candles, then it's time to pay attention. But we can look at BTC and ETH and then we can look at Doge, and it's like, what storm, what rain, right? There's nothing wrong here. Doge looks like it's ready to recapture all-time highs. It's insane. That's why it feels like this is the most disconnected maybe the market's ever been, alts versus majors, especially Doge. Ren on the conversion, the Ren USD conversion, hit its 200-day moving average, which I like as a buy in a vacuum. It hit the monthly pivot. So the trend still looks iffy, but if you're buying mean reversions, that's the type of chart you want to look for. On the Ren USDT Binance chart, though, it did go to zero. I mean, this is a real wick. This is an artifact. This is what happens when you have poor bid liquidity coupled with a margin cascade. Because as this goes down, you're just margin calling every single long on margin, or every single leveraged long, and it just pushes it lower, right? If your margin call is here, if you're long and there's no bid side, it just auto sells. And if it happens fast enough, you get the waterfall cascade, which is what you got here. So, trading alt on leverage is always iffy, especially if it's a lower market cap alt. And then lastly, I'll talk about DeFi later in the week, but again, from this bullish bearish perspective, if you're bullish, you want this horizontal to hold. You want these highs to hold. If you're bearish, you want to see us break this wick, certainly, but you definitely want to see us break even this horizontal, this previous horizontal. If anything, this looks more like white coffee and accumulation, or looked like white coffee and accumulation, than an ascending triangle or bullish continuation or anything like that. And it still looks okay now, but we need to confirm, if you're bullish, we need to confirm this previous resistance is definite support here. And you can see just how deep this wick down on this index. So things for alts got ultra nasty over the past few days. So that's all I have for this one. You can check me out, I guess, trading on ETH BTC on Enzyme, like I mentioned. You can see AUM, trades, what I've done and when and why, all that sort of stuff. We also have a DeFi portfolio that I'm slowly allocating into 15 to 20 or so alts as the AUM gets ramped up. Alts being DeFi type stuff. So that's all of this one. Like, dislike, comment, share, subscribe, and happy trading.